Hi, this is Dan Encell, Prudential California Realty. Today is Thursday, March 3rd. Way too much stuff to cover yesterday in one day, so thought I'd break it into two. Here we go. For 2010, just saw the statistics that foreclosures nationwide made up 26% of all sales across the country there. So, huge percentage compared to what we're normally seeing. Also saw across the country on average home prices dropped over 6% during the last 6 months of the year. So definitely didn't finish very strong. Not unexpected though, because the federal tax incentives expired then. So there was expectation there would be a drop. They weren't expecting it to drop that far. So 26% of home sales nationwide were short sales or foreclosures, some sort of distressed properties. Leading the pack in that was Nevada, where 57% of all sales were distressed sales there. California was 44%. So again, some of the western states, you've got Nevada, Arizona, California, and then the far other end of the country, Florida. Those seem to make up the ones that have been hit the hardest. That's where they did the most building there. Here's a stat that I don't like seeing. Pending home sales decline in January. What pending home sales are, they're actually tracking the number of properties that are in escrow, so it's forward-looking. They're not looking what's closed, they're looking what's going to close. And that's the third straight month that that number's actually declined on a nationwide basis there. So that's not good. That means the pipeline for what's going to be happening in the future isn't looking good nationwide there. So sort of a discouraging one on a national level there that, again, market still hasn't found its legs there. Big news here on the cutting board. The Obama administration is looking at phasing out the mortgage giants, Fannie Mae and Freddie Mac. Between those two, they make up 60% of all the mortgages in this country there. So banks package loans, Freddie and Fannie buy them up, and so basically allowing lenders to keep loaning out there. So they're talking about phasing those out there. That'll be huge. It'll be a very different mortgage climate than we've ever seen in the last 30 years there. So it'll be very interesting to see how that pans out. Banks are plotting it. It means more business for them, but for consumers it's going to mean tougher loan standards and higher loan costs there. So it'll be interesting to see on that. $1 million home sales up last year. This is California here, but it says that the number of $1 million homes actually increased for the first time since 2005, where they actually peaked. In 2005, there was about 54,000 $1 million plus home sales in California, and then from 2005 it went down every year, but bumped up a little bit last year, and there were about, about 22,000 of them last year. So at least, you know, went down, starting to head right in the back in the right direction there. So that's good. Economic forecast for our county there and for the state, they're sort of predicting that slow growth. So we're going to be at that bottom of the trough for quite a while there. But they think that foreclosures will actually peak during this year, meaning that from here on out it'll be getting better. The number of foreclosures will be declining in the pipeline. So everyone knew there was years of them in the pipeline, so it's not unexpected. It's good to know that the expectation is that we're getting towards the end of that pipeline there. Another headline, second housing bust hammers more cities. This is again on a national basis there, and what they're saying is that, you know, prices went down, they sort of plateaued a little bit, maybe you've started to creep up a little bit, now they're dropping again, sort of the fear double dip. Again, not unexpected since the expiration of the federal tax credits there. So question is, how much will they drop, and, you know, when will they start to bottom out again there? So hopefully that'll be really soon there. And the Wall Street Journal, just to finish it with some good news. Headline, why 2011 may be the end of the housing crash. They're sort of predicting that this year is going to be sort of the flattening out of that decline that we've had for the last several years. Reasons for it? Affordability has increased tremendously The housing prices have come down 25, 30, 40% in different parts of the country, more in other places there, making them much more affordable. Loan rates are very, very cheap. Interest rates are hovering right around 5% right now, so that makes it attractive for home buyers also. Tremendous amount of distressed properties that are very good values to buyers. Stock market's doing pretty well, so for lots of reasons, they're saying that this is going to be sort of the year that the market bottoms out and starts that expected long sort of, stay at the bottom before we start to climb out of it. But being in the industry, it's good to know that at least there is a bottom there, because it's been years of just declining there. And so the fact that the experts seem to think that this is the year that we reach that bottom, good stuff there. So that's what's going on. Lots of headlines to breeze through there. And have a great weekend.